Hey guys, Matt here. In this week's portfolio update, as I promised, we're going to be talking about Gevo's earnings. And stay to the end because I got some information that you're really going to want to see. Let's get the portfolio out of the way. We are looking a lot better compared to last week, the week before, last month, and maybe this year. Like, if this keeps up, I might only be four figures in the hole. Like, we got SCHD finally profitable, which is a great sign. Get Revolve back up to 95% gains. We got Tapestry at up 148%. Tesla is still hanging in there. Walgreens is back above 40. As far as the growth stocks, Google is approaching 100. Meta is at 113, so it broke 100 again, just this time the right way. Palantir is on its way back up. Gevo, I am only down 46%, which is an improvement. Overall, we're doing really, really well compared to this entire year. So we're looking really good so far. Now, as far as the moves I made, on the second I put $600 into the portfolio, I bought some AT&T, I bought some Google, and I bought some SCHD. Okay, now let's talk about the reason why you're here, Gevo's earnings. Now, when I did my Instagram Reels, it was more of a gut reaction. And I said long-term were good, short-term it was a bit disappointing. And like I said, it was a gut reaction before I had time to dig deep into the earnings call, before I really looked into the 10Q. And I gotta say, after looking through all that, I'm pretty impressed with how Gevo has done so far. I'm a lot more impressed than I was during my gut reaction. So let's talk about that. Well, first of all, let's show the stock price. Now, after the earnings, yeah, it took a bit of a tumble, but I mean, after that, it sort of bounced back. Now, if we take a look at some of the numbers, and I want to focus on this a little bit as far as the misses and stuff like that. Let's start with this. So let's talk about analyst expectations for a minute. Analysts had Gevo coming in at 1.22 million, and I looked on the Yahoo page, and there were only 4 analysts that were queried for this. And I want to start here because I want to bring up a point with Gevo. And this is both on analyst side and on Gevo side. Now, as far as the analyst side, I mean, who was expecting Gevo to come in at a 1.22? I know we had the low estimate coming in at around 200K, which Gevo beat, and then the high estimate at coming in at somewhere well above 1.2 million. And I don't know what analysts are thinking, because I mean, I don't know if analysts are intentionally bringing these high estimates so that because they know Gevo is going to miss them, so that the stock will fall. Maybe they're shorting the stock or whatnot. I don't know what analysts are thinking, expecting Gevo to come in at 1.2 million so early. Now that's on the analyst side. However, I can't wholly blame the analysts on this because Patrick, I mean, Gevo's getting a lot better at this, but I mean, they have not been so really good at giving concrete guidance for this quarter or next year, and they didn't do it in this earnings report either. Like, we know next year, what was 16 to 22 million or something like that in EBITDA, and then Gevo did mention in a press in a news report that they're expecting to get some sales from commodities, and then it's supposed to get better in the fourth quarter, and it's supposed to really ramp up in 2023. But they didn't give a number on that. And what I'm trying to say is, if Gevo is not going to give concrete numbers, that's fine, but analysts are going to make numbers up. Now, if we take a look at the numbers themselves, and we're going to hop over to the 10Q in a second, as far as revenue, they're doing much, much better than last quarter, and the quarter before, and the quarter before that. So this is a step in the right direction. Now, if we take a look at the numbers, hopefully you can see this if you're watching this on a mobile. If not, I apologize. But revenue, much better than this time last year. Well, what are we talking? We're talking a 111% increase. So yeah, really, really good. Now, if we take a look at the gross loss, it appears to be worse than last year. Well, it is. But that's because they had some idle facility costs. Now, I'll show you why right now. If you take a look at the 10Q, which is what I'm looking at now, this was a conscious decision by Gevo to turn the Laverna facility, which was their means of revenue for some time, and to carry maintenance and some R&D. And so they moved people out of it to focus on the net zero projects. And the cost, which I believe is a one-time asset, which is pretty much removing equipment. So if we remove the idle facility stuff and the depreciation stuff, they're not doing too bad on a gross basis. They're not doing too bad at all. Now the loss from operations, look, this is probably going to keep ramping up as they continue to develop on the Net Zero 1 plant. So this is probably going to keep going up for some time, and that's fine by me. Assets and liabilities are looking really, really good. Now, as far as their operational updates, this is stuff that if you've been following Gevo, this is stuff you probably already knew. Net Zero 1 is on track. They haven't reported any delays, which is fantastic. The USDA tentatively selected Gevo for a grant. And then there's pretty much more airlines signed on with Gevo, which is really, really good from a long-term basis. So if you made it this far, congratulations. This, I think, is the most important part of the video, the Q&A. Now, first of all, I want to point out that this time, more than one person asked questions in the Q&A, so that's pretty good. That means the earnings report was at least that interesting. This is right here. I want to point to two things. Now, the first one right here should be considered a blessing to anyone who's been thinking about share dilution in Gevo. I know I have. So we got Sean Severson asking about financing as far as the future, the Net Zero 1 plan. Now, I'm not going to read this entire answer. You can pause and read this if you want to, but the gist is that, Patrick is aware that he needs to raise money for Net Zero 1, Net Zero 2, Net Zero 3. And he states, now, I don't know if this is going to be true or not, he says he doesn't want to do share dilution. So what he's going to do is set up a sub-company beneath Gevo on a platform level, and then he's going to do the financing that way through banking leads such as Guggenheim and Citi. Now, I'm not an expert at financing or economics or this sort of thing, so I don't know if this is a good idea or not, and we'll have to see if this actually pans out. But if this works out, then the likelihood of Gevo needing to dilute shares down the road, at least for Net Zero 2 or Net Zero 3, should be pretty small. Now, like I said, we'll see how that happens, in practice throughout the years. But so far, this is a good sign. So, with any luck, we won't be getting any huge share dilution anytime soon. Now, I'd be remiss if I didn't include this part in the video. One of the final questions asked about the 12 to 60 million in EBITDA that Gevo claimed to start that we'd be seeing in 2023. Now, Patrick answered that because of the delay from CARB and all that stuff, we won't see all that money in the full annualized run rate. So we're not going to see all that in 2023. Now he didn't say. Now he said we'll see a chunk of it. We don't know how big of that chunk we'll see, and that's been a problem for Gevo. Like I said in the beginning of the video, is that it's nice that they're being honest, and it's nice that they're not lying about this. But the fact that they don't have clear numbers, analysts are going to have to make numbers up for Gevo to miss, so that the stock price will fall and the earnings. And I really hope that somewhere in the next few quarters they'll be able to actually give a meaningful, accurate guidance. So overall thoughts. As I said in my reel, as far as the long-term goal for Gevo, everything's perfectly fine, no delays, everything's happy. As far as the short term, as far as the revenue and the 2023 remarks on the RNG EBITDA, yeah, it's a bit disappointing, but we are headed in the right direction. Like, everything is getting much, much better. But anyways, take care, have a great day, and eat your vegetables.